Welcome back to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. Myself, Lotze, and today joined by property investor and cash flow specialist, Jono Frankle. And Jono, question to you today is, what is negative gearing?
That's a really great question because it's something that we come across quite often. Basically, it's the concept of buying a property to create a loss. The loss being that you less rent than your expenses associated to the property. That loss then gives you the ability to create a tax write-off against income from potentially other sources.
But hasn't there been something brought in the New Zealand market in the last handful of years to prevent this or reduce this across your taxes?
Yes, there has actually, because this is a strategy that was very common through Australasia, New Zealand and Australia. New Zealand has recently made some changes and brought in something called ring fencing. Basically, the concept of ring fencing means that you are not able to take those losses and attribute it to income from other avenues. So essentially meaning that those losses can only sit within the property that you have purchased that is creating the loss.
Yep. And fundamentally, when we're talking about the ring fencing, we're talking about you can't claim against your personal income, the tax side of it. It can only be done across that existing property. So if it loses money for 10 years, on the 11th year when it makes money, only then you can claim the tax on it on that specific property.
Correct. So you're looking at a very long-term strategy here. It's basically buying a property, hoping that increase in value, and then giving yourself the ability over that long period until the property starts to turn a corner and starts to create an income. So now we've got rent that well outweighs all the expenses. We now have the ability to essentially earn that money tax-free because you've got the tax losses that you've brought forward to that period. Essentially meaning, if you said 10 years of $10,000 loss, $100,000 worth of tax-free money that you're able to earn before you actually have to start paying tax on that money.
Yep. Thanks so much. And to anyone else that's listening or watching at the moment, if you've got any questions or any information about myself or Jono, the details will be in the description as always. And thanks for coming over to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. And as always,